Good evening, everybody. I hope everybody's having a good fall evening. All right. Tonight we have the good fortune of having Steve Primo with us. He's been in the investment business as long as I have. He started off as a floor reporter on the Pacific Stock Exchange and went on to be to continue his floor trading career with Donaldson, Lufkin, and Jeanette years back. So a lot of his trading techniques are from right there, first-hand experience. And the reason we like to see these type of techniques is because there's nothing put into them other than pure successful trading situations. So with that, I won't take up any more time. Steve, we're anxious to see what your techniques are, and looking forward to seeing some good information.
Thank you, Stephen. I appreciate it. Thank you, everyone at Candlestick Forum, and thank you to Becky. We had a little technical difficulty, so I hope I'm coming through loud and clear, and I hope that you can see the screen okay. Once again, thanks for inviting me and giving me the opportunity to speak. My name is Stephen Primo. I'm the president and founder of Specialist Trading, as you see right here on your screen. For those of you who are unfamiliar with my website, we feel we are one of your premier online sources for education in trading just about any market out there, from stocks to the Forex markets to E-mini intraday trading. To give you a little bit of background about myself, I have been trading for nearly 37 years. I started out on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for DLJ. I traded through just about every market environment imaginable. I traded through the crash of '87 and the great bull market that followed after that. I left the floor in the mid-'90s to manage money and to pursue my own trading interests. And I've seen and traded just about everything from quiet markets to very volatile markets, from intraday to long-term investing. And I was asked to be the director of education for a number of websites. And about 5 or 6 years ago, I decided just to focus on everything that I personally have accumulated in my nearly 37 years of trading and that I still use today. So we're an educational website first. We really want to teach you how to trade with the Specialist Edge and empower you with all the things that I've accumulated in my 37 years. So what I'm going to be talking about today is what I feel is the correct way to trade with the trend. You've heard it a million times before that trend is your friend, that trend trading is a lot more advantageous than trying to pick tops and bottoms. I'm going to show you a great technique of how to trade with the trend, and I'm actually going to give you all the rules to one of our premier strategies. This is strategy number 1. Usually reserved just for the members of Specialist Trading. But before we begin, we're required to show you a disclaimer, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this technique to trade with the trend and this strategy, but please remember that we can in no way guarantee that any of the results will be repeated in the future. So as you're taking a moment to view the disclaimer, I'd also like to mention, because of the technical difficulties we had here in setting up my charts, I can't see any questions, and I can't see if anyone's trying to correspond with me. So please hold off to the end of the presentation. It won't be real long, about half an hour or so. And then I'll answer all the questions then. Please, even if you ask a question, I won't see it. The only thing I'm seeing right now is my screen. So if you have a question, just kindly write it down and try to remember it, and I'll get to it at the very end, okay? Thank you so much. I appreciate that. Now, also, I'd like to start out by saying I know a lot of people think that because you traded on the floor or you were a specialist, a specialist for those people who aren't familiar with, if you ever look at the pictures of the floor trading people on the floor with all the paper on the ground, people yelling and screaming, the specialists were those few individuals behind the podiums because they were called specialists because they specialized in anywhere from 40 to 50 to 60 stocks. This meant that if you wanted to buy or sell any of those stocks, such as, let's say, IBM, you had to go to the person who specialized in those. So it doesn't mean that you're a special person or that you had a special advantage. It just really means that you specialized in that stock. You bought and sold that particular stock. And a lot of people feel that because you were a specialist, you had a license to steal. There was no way you could lose money. You were just automatically going to make money. Well, that really wasn't true in my case. In fact, if you're struggling with your trading, I know exactly what you feel like, because for my first year or so as a specialist, I couldn't make any money. In fact, I really thought that I was going to be fired pretty soon, because over the course of that time, I would have like 7 or 8 great trades followed by 1 or 2 disastrous trades where I'd give everything back. And my trading was pretty much like a roller coaster. My P&L, I would have these great months followed by disastrous months where I lost everything I just made. So in roughly about 2 years, I had nothing to show for all my hard work. It wasn't until I came in contact with a few elite traders on the floor. These were specialists as well. They became my mentors, and they really changed my way of trading, but most especially my way of thinking about trading. And this got me on the road to consistency. And what they taught me was that, Steve, you're making your trading way too complicated. It's far too complicated. I was looking at too many indicators, listening to too much news, subscribing to too many newsletters, and I was using all the things that conventional wisdom says that will make you successful, but it wasn't getting me anywhere. It wasn't until I started to really strip away those things and simplify my trading that it started to become consistent. So this is what helped me to become a consistent trader, and this is what I try to mentor and teach all of my students in our educational courses. Because my goal is to teach you the same things that were taught to me, and that's how to trade with the specialist edge. And the specialist edge is rooted in simplicity. You'll see how simple it is when I explain the method today that I'm going to be giving to you for free, how simple it is to trade with the trend. All right, with that out of the way, here's what you're going to be learning today. I'm going to give you two edges. The first is a proprietary indicator that you can find just about any charting software they offer it. If you don't, I would suggest asking for it, because many times they'll have access to this and they can send you a code for it. So this is a great indicator for discerning and finding out what the trend is. And then the second edge I'll give you is the makings of one of our most consistent strategies, where I'll give you the entries, the stop, and the exit rules. Okay? So I'll give you all of these things for free in this presentation. I'll show you a lot of chart examples, from older chart to examples that happened within the last couple of weeks. And then we'll have a question and answer. Once again, we'll have that at the very end. I usually have it at the very end, but we're going to definitely have to have it at the end because, as I said, I can't even see any questions right now. So kindly write them down or try to remember them. I really appreciate it. All right, why don't we begin? And let's start off by looking at this chart of Best Buy. We're going back to March of this year all the way up to the beginning of October. Now, it's plain to see that we've been in an uptrend. I mean, anyone can see that. And so looking back in hindsight, it's easy to see that, wow, the best places to buy in that uptrend would have been on these little sell-offs here, circled in green. These would have been the most opportune places to purchase Best Buy. But once again, this is really easy for anyone to figure out if you're looking back in hindsight. What we want to do is be able to find out what these opportune places are in real time before we've seen that they've kind of bottomed out and they start to go back up again. So how can we do that? Well, with the help of our first edge, this is our proprietary indicator, the DONCHIAN channels. Many of you probably have heard of these before. I'm sure some of you probably even use them. We use the standard 21-period DONCHIAN channel. We don't configure it a special way. We don't change it. We just use a standard 21-period DONCHIAN channel. And here's how we apply it, especially to different trends. So let's look at trading uptrends. How will we use the DONCHIAN channels if we want to trade uptrends? Well, here is an example of the DONCHIAN channels plotted. As you can see, there are three different channels. We have a top channel in blue here. We also have a median channel in red, and then the bottom channel in blue again. And what you want to see is this stair-step action where they're all going in unison in the same upward direction. Okay? So you want to see the stair-step up, sideways, and they're not all in sync. Many times you'll see something going sideways, one of them going sideways where the middle one might be going up and the top one might be going up. That's okay. As long as they're all going in an upward direction, that's all we want to see. They don't have to be in sync. All right? And so what will usually happen is when you have them all in sync like this, you'll see price start to rally, start to ascend, and then it'll sell off to that median line here, okay? That's the buy zone. That's where you want to start, being aware of places to purchase whatever we're trading. So prices will usually, in an uptrend, come down to that buy zone, the midline. Then they'll rally again, and then they'll sell off and come back down to the buy zone. Then they'll rally again, and then sell off and come back to the buy zone. So it's this buy zone is what we're looking for, okay? Now that we have a little structure to our plan, we can start to see where these real nice environments are to go long. So let's look back at the chart that we looked at before. This is Best Buy. All right. Now, these were the places we wanted to purchase. But looking back in hindsight, once again, it's easy to see that, oh, sure, I would have bought there on that little pullback and on this pullback. But how could we find that out in real time? Well, we simply add the DONCHIAN channels. And as you can see, when price sold off, it touched the median line and then rallied again. Sold off, came in the area of the median line, and then bounced up again. So do you see how simple that is? All right? Rather than trying to pick a top or pick a bottom, we're just going with the trend and what we feel is the correct way to trade with the trend. All right, what if we want to go short? What if we're trading downtrends? Well, we just simply use the same technique, but we reverse it. So we're looking at DONCHIAN channels now that are all in sync in a lower direction, okay? We want this three stair-step down approach with all the DONCHIAN channels. I'm sorry I said in sync. We don't mean that they're literally in sync, where they're all moving in unison. As you can see here, this bottom line is going sideways while these two top lines are going lower. That's okay as long as they're all heading from a higher direction, heading sideways, lower, just like a staircase. That's what you want to see. So what will happen is that price will usually, in a downtrend, sell off, but then bounce or rally up to the median line. This is our sell zone. This is where we want to look to go short or to exit. Then price will sell off again and then bounce back up to the sell zone and continue in that manner, okay? So if we look at Apple coming into the beginning of this year, obviously Apple was in a very strong downtrend at that point. So in hindsight, these were the most opportune places to go short Apple. But remember, it's real easy to look back when the trend is over and to say, well, I would have loved to have shorted there on that little bounce. How could we have done that in real time? Well, we apply a little structure. We apply the DONCHIAN channels. And then we see that once we touch that median line, this was the prime area, prime environment to go short. Okay? All right, so we've seen the perfect areas to go short, but we still don't have any structure yet. We just know where we want to go short or where we want to go long. Okay? But how do we actually apply some rules to this? Well, this brings us to strategy number one. As I stated earlier, this is usually reserved for members of specialist trading, but I'm going to give you the most standard rules to trading strategy number one. So you can, once you understand it, you can start trading it as early as tomorrow if you'd like, if you have access to the DONCHIAN channels. But remember, once again, we always, even people that purchase our courses, we always tell them to paper trade for a while. There's so much more you'll learn while paper trading. A lot of our students say, boy, this is fantastic. I've got to figure out in the first couple of hours, I'm going to start trading this. And then they begin to lose money because it's one thing to see it, how it works on a static chart. It's another thing to see how it works in real time. So there's a lot you can learn by paper trading in real time. So let's get on with the rules to strategy number one. And this is our second edge, We're going to share with you the entry, the stop, and the exit rules, okay? The most standard rules for these. All right. So I'm sure the presentation is being recorded, so if you're not able to copy this down, I'm sure you can request a link to the recording. But we'll go through this rather quickly so I can show you some examples. But you want to look to buy, remember we're looking to buy, in this example, uptrends, but look to buy when price begins to decline, as we showed you before, and then touches that rising mid-DONCHIAN channel. Now, once that bar, whatever bar touches that mid-channel, it doesn't matter where it closes, doesn't matter if it closes above it or below it, but once it touches, we're going to enter when price trades one tick above the previous bar. So in other words, that'll be our first bar that triggers an entry signal. But we're not going to buy at the market. Price has to trade one tick above that bar. Now, if the next bar goes lower, well, now we drop our price of entry down to one tick above that bar, and so on. We just keep trailing it until we're filled or until the signal is negated. And then we just reverse this for sells. I know this may seem a little wordy, but I'm going to show you a lot of examples so you'll be able to figure it out real quickly here. All right, so here's Best Buy once again. We see we have all three DONCHIAN channels headed higher, so they're all in unison. And we see that price sells off and touches the midline right here, and then another example right here, okay? So we have the areas where we want to look to buy, right here and right here. We're just not going to buy at the market. What we want to do is, this is our trigger bar where we're looking to buy, and we're going to buy once price trades one tick above the previous bar's high. So if we keep going lower and lower on the height of the bars each and every day, we're going to ultimately enter at a much lower price. All right? Same thing with here. This was our trigger bar, so we would have purchased the next day if we traded here, but we didn't. So now this is the trigger bar. We didn't trade there. Now this is the trigger bar. And so you can see we entered right here on this day, and then we entered here on this day. See how that works? Same concept works to the downside. Here's that Apple chart once again. Remember we saw that price has to rally and touch the midline. Now it looks as if this bar touched the midline, but it really didn't. Actually what happened was the closing price touched the midline, but the actual length from top to bottom of the bar did not. So this is not a valid area to go short. But these two areas are, because they did intersect and touch. And remember, once again, we don't care if we close above or close below. It really doesn't matter. So this is where we want to look to sell once we touched and intersected that median line and once we intersected the median line. But we don't just sell at the market. What we do is now we wait for price to trade one tick below beginning on this first day. And as you can see here, that's where one tick below is. So you would have entered to go short right here and entered to go short right here once you traded below. It's that simple. All right, so once we're in the trade, where do we protect ourselves? Because I'm not going to sit here and tell you that every trade is profitable. Some trades don't lose. Some trades don't win. Other trades lose. So where are you going to place your protective stop? Well, just place your protective stop just below the lowest low of the pullback and do the reverse for sell. So let me show you what that looks like. If we would have entered Best Buy right here when we traded above the previous bar, the lowest low previous to our entry would have been right here. So that's our stop. Okay, you can place this a tick below. You can place it a half point below. It's up to you. The same thing in this example in this entry right here. Had we entered right here, well, the lowest low prior to that, short-term low, would have been right here. So we just simply enter our stop at this point. Same thing with the downside. If we entered at this point, where was the nearest short-term high? Well, it was just a couple of bars ago right here. So we would have placed our stop here. And if we entered at this point right here, where was our nearest short-term high? Well, it was right here. So we placed your stop right there. All right, so we've protected ourselves with a stop. We've entered into the trade. Now where do we get out? Well, we'll share with you our most standard or generic way of exiting. If you're long, you're going to exit when price touches the high DONCHIAN channel. That's it. Once it touches there or intersects there, you can exit at your own discretion. Okay? And if you're short, you can exit when price touches the low DONCHIAN channel. Okay? You can cover your short. So let's look at these examples again. We entered here. We placed our stop. And so far, it's going in our direction. And then guess what? We intersected this line here. This line was going sideways at a time. And once we went above it, the line configured to go up with it. So you would have exited at this point. Roughly entered at 23.5 and exited at 26.5, 3 points in about a week or two. And then at this point, you would have entered again at 26.5 and exited just in a couple of days at 27.5 for a quick point. If you'd like to get larger points, then you simply go to stocks that have wider ranges, or you can go to weekly charts or even monthly charts. This concept works just as well. Same thing, if you're going short, we entered here. We simply wait for price to touch the lower DONCHIAN channel. That's our exit point right here. We would have shorted at 550 and covered at 505. Now at this point, you could have shorted at 475, and once price touched the bottom line right here, you could have covered at 440. All right, so you have the basic concept. Now let's look at a lot of charts. Some of these may be older, some of these may be newer, but just these are for educational purposes so that you understand how this concept works. Let's look at some stocks. Let's start out with the daily chart of Pandora, letter P. We have all three DONCHIAN channels headed in the same stair-step upward direction. Price sells off, and this bar touches the median line. Even though it closes below, and even though the rest of the bars are below the midline, that's okay. They're still valid triggers because all three lines are still headed in an upward direction. So we continue to do this countdown until price trades one tick above here at 18.5. And then we place our stop below the lowest short-term low. And then we simply wait. We're either going to get stopped out with a small loss, or we can exit when price touches this. Now, normally you would have exited when price touched, but since we gapped above, you would have had a nice exit at 23.5. So you basically got about 5 points in a couple of weeks there. How about Tiffany? This is a daily chart of Tiffany. All three lines are headed in a stair-step upward direction. Price sells off and touches the median line, so we use our stair-step entry approach. And once we trade one tick above any of the valid bars, that's where we enter at 81. We place our stop just below the lowest short-term low, and then we wait for price to rally, and it exits at 83. So a quick couple of points in roughly about a week or so. And this is where many times you'll see we'll stop right at that exit point. Sometimes you'll see price continue to go higher. Other times you'll see price get right to that highest DONCHIAN channel and then change direction. Now, this also works at different time frames. Here's another chart of Tiffany, but on a weekly basis. Well, it looks almost like the same chart. We have an uptrend in the DONCHIAN channels. Price slowly sells off. Once it touches the midline, that's where we're going to buy if it trades one tick above here. No, it didn't. So now this is the valid trigger. If it trades one tick above here, that's where we enter. We entered at roughly 74, and in about a month, we exited at 82 roughly. About a daily chart of ESV. Now this example is a shorting example. All three lines are headed lower. So we want to see price rally. Price rallies. And then once price touches the midline, doesn't matter where we close, we can either short if we would have traded here, below here on the next day, but the next day never got that low. So now we're going short if we trade below here. Well, we gapped down. So we entered at 57 roughly, placed our stop just above the highest short-term high. And then we're either going to get stopped out with a minor loss or price is going to touch the lower DONCHIAN channel, which it did, roughly about 55. So a couple of points in about 3 or 4 days. How about WIN? Okay, this is a daily chart of WIN. We have an uptrend as represented by the DONCHIAN channels. In 2 days, we sell off and touch the median line. We apply our entry approach, and price traded one tick above right here, roughly at 142. And then in the next couple of weeks, it touches the top line at 146. So 4 points in about a week or so. Now, here's an example of where price continued to go higher. Now, here's what most of our beginning students usually say. They say, Steve, I love this technique, but many times I'm giving it away. I sell and I make a couple of 2 or 3 points, and then if I would have held on, it would have gained about 10 or 20 points. Well, in the course, we have advanced methods for exit. So we show you how to hold on to gains and stay in the trades a lot longer. But that's just basically for course members. I'm just showing you the standard generic exit rules for right now. How about the S&P? Well, here's the spiders, the ETF of the spiders. Now, what a lot of students like to do is, because they like to use signals on the spiders or on an ETF just to represent what that market is doing. So in other words, in these examples right here, if you see an uptrend in the spiders and then a signal to go long, well, what you can do is use that just as a directional tool for what you think the market's going to be doing. And you can apply it to purchasing other stocks or other tradable units just because you know that if you have a long signal in the spiders, well then most stocks will be going up as well. So you could use this mainly as a directional tool as opposed to actually purchasing a $150 stock, the spiders. All right, how about the S&P E-mini? A lot of people trade the E-mini, and I know they like to trade intraday. So let's look at a chart of the E-mini on a 10-minute time frame. As you can see here, we're going higher. Price sells off, touches the midline. Okay, now as you see here, a lot of people would say, well, I want to buy it. The E-mini is so strong, but we have to wait till it touches the midline. That gives us some point of reference that we've pulled back enough. But it's not just enough to touch that. We have to wait till price trades one tick above. Until it trades one tick above the previous bar, that's our entry point. So you would have entered at 1679, and in about 20 minutes you could have exited at 1681. Made a couple of points there in about 20 minutes. How about a 1-minute chart? Well, the same concept applies to the downside. We wait this time for a bounce. Once price touches the midline, we apply our entry technique. Once we trade one tick below, you could have entered at 1712 and exited roughly at 1711 for a quick point in about 5 minutes. And then do the same thing here. Once we rally and touch the midline, we apply our entry approach. When price trades one tick below, we would have gone short at 1709 and covered at 1708. So roughly in about 10 minutes of trading, you would have made 2 points. That's about $100, depending on how many contracts you're trading. If you're trading one, that's $100. If you're trading 10 contracts, that's $1,000 in just about 10 minutes work. How about an hourly chart? Well, the same concept applies. All three DONCHIANs are headed higher, but we wait for price to sell off, to touch the median line as it does here, and then this is our trigger. We can only buy if price trades one tick above, which it does right here at 1653.50, and then in about 4 or 5 hours trades up to 1660. So you made about almost 6 or 7 points there. And as you can see, in this example, this was the exact right place to get out because the trend changed. Excuse me. Here is a weekly chart of the E-mini. As you can see, this concept, this method works in any direction, any time frame. Same concept applies. All three DONCHIAN channels headed higher. We wait for price to sell off, Once it touches the midline, we can only buy if we trade one tick above, which it does here at 1610. And in about 3 weeks, we exit at 1680. So that was a nice 70-point gain in roughly about 2 or 3 weeks. All right. Lastly, let's look at the Forex markets. Now, it's my opinion that the Forex markets are the best trending markets around there because there's so much money behind these markets. They really just overshadow all the other markets combined. So this technique works even better than in the stock or in the E-mini markets because there are so many trends with the Forex. Let's look at a weekly chart of the Canadian dollar. We have two nice signals here on a weekly basis. We're going up with the DONCHIAN channels, so we wait for price to decline and touch the median line. Once it trades, in this case, 1 pip above on a weekly basis, we enter, and then we simply exit when price touches the top line. And then we do the same concept again. About a month later, we get another setup, and then we exit when price touches the top. Here's the Swiss franc. Excuse me, Swiss franc. All 3 DONCHIAN channels are headed lower. Excuse me. So we wait for price to bounce and touch the median line. Then we start to apply the entry technique. We wait for price to trade 1 pip below the previous bar. Here's our point of entry, 93.30. We exit at 91.70. A couple of hundred pips there in just about a week. How about a 10-minute chart, the Australian dollar? Well, obviously the 3 DONCHIAN channels are headed lower, so we wait for price to bounce. It does here, so we apply our technique. And you could have entered to go short here at 94.30, and then you could have covered real quickly at 94.20 for a quick 10-pip gain. Now, this is for intraday traders. I know it's not a lot. 10 pips is not that much. It's just $100. But still, a lot of intraday traders like to trade the Forex. You could have done the same thing here roughly about an hour later and then made another quick 20 pips or so. About the euro-yen, looking on a weekly basis here, we have a perfect setup. All 3 DONCHIAN channels are headed higher. Then we wait for price to sell off. Here's our trigger. And then once we use the countdown here to see price trade 1 pip above, that's our entry to go long. And you would have entered right here at 129.50. And then you're either going to get stopped out here at the lowest short-term low or wait for price to trade up here, which it did at 134. And then lastly, to show you how well this works in different time frames, here's a monthly chart of the euro-yen. Okay, so the same concept applies. These lines are all going lower, so we wait for price to bounce. As you see here, we're not trying to pick a bottom or a top. We're just trying to trade with the trend, and how we're applying that is by trading pullbacks. The DONCHIAN channels tell us the trend, and they tell us where the right environment is to enter long or short. In this case, short, you have entered short right here, place your stop above the near short-term high, and then waited for price to touch the bottom line. Then you could have had another entry here at 106 and covered again at 96 roughly. And as you see here, this was a perfect place to exit because the trend quickly changed to the upside. Now, what we've shown you in the last half hour or so is the basic concept of strategy number 1. Once again, this is one of our most consistent strategies for trading with the trend at specialist trading. I personally trade it myself. I like to trade it a lot intraday, but you can trade it, as you've just seen, weekly, monthly, hourly bars. It really doesn't matter. It doesn't matter if you're trading it for stocks, for the E-mini markets, or for the Forex markets. Now, as I stated earlier, we're an educational company, so we have a course where we teach this strategy as well as roughly 7, 8, 9, 10 other strategies for trading the markets. And mostly what happens with our students is that when they see a strategy that they really feel comfortable with, their eyes light up and they want to start trading it the very next day. And there's nothing wrong with that, but we always suggest our traders to paper trade, as I said before, because so many times they'll swear that they know all the rules and then they begin to trade it and lose money. So what really happens is that when I go back and talk with them and see their trades, what happens is that they're really not following the rules correctly. Either all 3 DONCHIAN channels were not in sync, maybe only 2 were, and they weren't looking at the last one just by mistake, or maybe they didn't really understand the entry process or the stop placement, so they invariably lose money. So the best thing is always to paper trade, even if it's for a week, for a month. It really doesn't matter, as long as you fully understand the process. And now one of the best tools we have for people to learning how to trade with this is an add-on we have for strategy number 1. What this add-on does is that it automatically generates buy and sell areas buy and sell arrows where those entry areas are. So as you can see here, if we look back at these charts, here's the weekly chart of Tiffany. You can see that arrows were initiated right here. So right now you know that you're going to buy if price trades one tick above those bars. Now we have other advanced ways of entry where you don't have to wait for price to trade one tick above. So these bars, once you get to that advanced level, these bars would let you know where those areas are as well, and you can apply the other techniques. Here's Apple, as we saw here, and here were the two areas to go short as generated by the add-on. Here's the shorting in ESV, and as you can see where all these red arrows are all places where you could have gone short because these were the points of entry, the trigger points, using strategy number 1. You want to apply it to the E-mini. Here's the weekly chart of the E-mini. Once again, you could use this as a directional tool. So you don't have to actually buy, this is the spiders. You don't have to actually buy the spiders, but you could use this as a directional tool. Here's the E-mini. Here's the 5-minute chart of the E-mini. I know a lot of guys like to intraday trade the E-mini as I do. Well, it's so simple once you have this add-on, and you can just see all of these green and red arrows where the entry triggers are. But please remember, as you see here in the E-mini on this 10-minute chart, this is not telling you to go short. This is telling you this is a trigger that you're either going to sell short one tick below this price, or you can use some of our advanced entry methods. And here's a 1-minute chart of the E-mini showing you where you could have used this entry point as well. So it makes it a lot easier, and as well, when you're learning how to trade this on site, you'll see if you're in sync with the rules or not. Because if you think you should be going the euro-yen on a weekly basis and you don't see a green bar there or a green arrow, well, it means that something's out of whack, that maybe you're not applying the process correctly. So, let's recap. What did we share with you today? We gave you a proprietary indicator. We showed you how to use it. That's the DONCHIAN channel. Remember, we want to see in an uptrend, all 3 channels headed in the same stair-step upward direction. Okay? That tells you you're in an uptrend. Doesn't matter if they're in exact sync with each other. We don't care about that. It just matters that they're all headed in the same stair-step direction, either up or down. And then we gave you the second edge, our entry, stop, and exit rules for one of our most consistent strategies. That's strategy number 1. And that is basically the generic rules for entry, stop, and exit. And as I stated, you can start using this as early as you like if you have the indicator available. And it's very simple, but we always suggest a paper trade. And then we share with you one of the best learning products we have. That's our add-on. That's a strategy number 1 add-on. Now, I'd like to just take a second to share with you a great promotion we have for all the attendees attending today. And I want to thank Stephen and Becky for giving me this time to just share this with you. This is strategy number 1, the course. If you really want to learn the entire course with all the advanced rules and all the advanced entries, exits, and stops, I urge you to take advantage of this great discount we're having. It's really inexpensive price at $6.99. Well, we're discounting it down to $4.95. It's a great price that trades virtually everything. And one of the things I wanted to share with you, we're giving you the add-on for METASTOCK. And one of the great things about METASTOCK is it has a scanning tool called the Explorer. And what that does is it will automatically scan all the different markets, whatever you choose, to find out where strategy number 1 setups are, and entries and trades that have taken place. For example, if you went and simply clicked on the icon and you see all the uploaded different methods and strategies you could use, you just highlight strategy number 1, and then you'd hit next, and then it asks you which market you want to look and scan. And so we picked the NASDAQ, and this was actually done just a week ago. And so we scanned it, and we see that Starbucks with the letter number 1 here said that there was an entry in Starbucks. So this was on the 10th, as you see here. So if we look at Starbucks, on the 10th, we basically got long roughly about 76.5 on that gap opening. And it followed all the rules. And then 2 days later, you could have exited at 78. So this was a great, great tool. It's a great technique that comes with METASTOCK. Now, we also have this add-on for NinjaTrader as well as for TradeStation. But we're having a special discount for METASTOCK users, discounted from $6.95 down to $4.95. But this is for a limited time only for all the attendees today. And I want to thank you for taking time out of your evening to come and hear me speak. And so because of that, strategy number 1 is a great, great technique. It's a great down to from the normal price of $6.95 down to $4.95, but for a limited time only. Now, this comes with immediate online access. So you don't have to wait for anything to be shipped to you. Complete course rules, the advanced and the standard rules, detailed instruction, all the entries, exits, and stops, PDFs of the rules so you can print them out and study them. And lastly, you have my personal email address. You can contact me whenever you'd like. Now, at Specialist Trading, what we usually do, we have courses with upwards of 10 specific different strategies, anywhere from intraday to long-term to swing trading. But what we've done is we've teamed up with Pro Trader Strategies, and they're selling our individual strategies, such as you see here. So if you want more information or questions, you can go to Specialist Trading, and that's where we have the full package of suites where we have anywhere from 1 to 10 different strategies per course. Or you can go to our sister site here, which is Pro Trader Strategies, and that's where we have decided to sell individual courses, such as strategy number 1, which we talked about today. If you wish to speak to any one of our trading sales consultants, you can email them at trading@protraderstrategies.com, or if you'd like to give any of them a call, you can call them at 310-598-6677. So I'll stay on here just a little bit longer because, excuse me, as I stated, I want to take questions, but the only thing I can see right now is this screen. So once I exit this screen, we're just going to go back, I believe, to the home page, and you'll just see the names, the column on the left, and then the blank screen, and then the questions on the bottom. So I just want to give everyone a chance to copy these down or write these down. Remember, if you're interested in my full package of upwards of 10 different strategies, you kindly visit my website, specialisttrading.com. Well, it's mainly a personalized mentoring. That's really what I do. I take my 37 years of trading and I pretty much mentor you in a package of upwards of 10 different strategies for those different courses. If you're interested in individual courses, such as we shared with you with strategy number 1, visit protraderstrategies.com, and that's where they market and sell all of our individual strategies. If you'd like to ask anyone a question, or if you want to purchase a strategy, you can go to trading@protraderstrategies.com, email them. They'll give you that special discount, or you can ask them over the phone and by simply calling area code 310-598-6677. Okay, I feel we have roughly about 15 more minutes or so for questions. So if we've all got that down, if you'll bear with me, I'm going to exit this and then stop this altogether. I'm going to minimize my screen here and simply hit stop. And I believe you should be just seeing the standard Omnovia screen here, if I'm not mistaken. So I'm going to look at the questions right here. And I'll backtrack a little bit just so that I make sure I don't miss anyone. Okay, let me just go back a little bit because I see we have a number of questions. And once again, I thank you all for attending here. Gerald was asking what time frame for each bar. Well, as we showed you, Gerald, we use different time frames. I showed you 1-minute time frames. I showed you daily, weekly, and monthly. So this technique works in anything, but remember, it's looking for the first thing it's looking for is a trend. So the beauty of this is if you have a sideways or choppy market, well, you're not going to see all of those 3 DONCHIAN channels in sync. One will be going up, one will be going down, or vice versa. So that's the beauty of it. If you see that, well, then it's telling you there's no real trend. So then we're simply out of the market. We don't want to you can apply another strategy that trades with, rangy markets, or you can just sit on the sidelines until a trend has started. DONCHIAN channels, thank you, Jim. DONCHIAN channels are set for 21 periods, yes. Options Express shows 20, 24. That's fine. I mean, if you can change them to 21, 20 is fine. I mean, it's not like a magic number where it has to exactly be 21. And I know a lot of people will say, Steve, I have the DONCHIAN channels. I have the top and the bottom, but I don't have the middle line. That's okay. I know some charting software packages don't offer that. If you have access to just plotting a 21-period simple moving average, that'll work just as fine. It won't be in that same type of up-downward type of display as the DONCHIAN channels, but at least it'll give you a point of reference to when we touch that, you'll know that that's your trigger point, okay? Yes, Corey, DONCHIAN channels are available on Thinkorswim platform. I believe they are. Let me go back here and see some. Terry is asking about the stops. It would be the same as a pivot stop. Yes, and Terry, once again, we just shared with you our most basic generic stop. We have upwards of 7 different stop placements from anywhere from advanced to very simple stop placements. I just don't want you to think that's the only stop placement there is. As well, we have different ways to track a trade with our stop placement. So these are all things, once again, a lot of things I learned on the floor, a lot of things I've accumulated in just 37 years, and these are all things I use myself in my personal trading. It's also is asking, does this work with the futures and in shorter time frames? Yes, it does. I showed you how it works with the E-mini in roughly 1-minute charts. In fact, I was using it today on tick charts in the E-mini, so it works fine. Charles is saying for Forex the stop loss is too much. Yes, that's just one of our basic stop losses. And then if that stop loss is too much, you can go down to the mini lots. So instead of perhaps risking 300 pips, you're only risking comparable to 30 pips. So it all depends. It all depends on what your account size is. But remember, once again, we were showing you the standard generic stop placement. We have other stop placements that have much less risk than that. Arwen is asking, is this being recorded? I believe it is. If you ask Becky, I believe Becky's here. I believe this is being recorded, yes. What do you do when the price crosses both the upside and then lower? Well, Larry, I think I need a little bit more reference to that. If you're saying when you're in an uptrend and price, I'm just not sure if you could send me that, or maybe email us that question. We can, with a little bit more detail. I'm not really sure. Jose is asking, so this method is not good for sideways pricing action? No, it's not. Remember, the title of this presentation is the correct way to trade with the trend. Okay, so we're trying to catch a trend. And in my 37 years, I know it's been probably beaten into your heads from all the presenters and educators, but it's a recipe for disaster trying to pick tops and bottoms. Believe me, I know this from first-hand experience. I tried to pick tops and bottoms for years, and it worked fantastic. Fantastic. I would make tremendous amounts of money until the times it didn't work, and I would give everything back. And so that's not the way you want your trading to be. You want it to be consistent, because consistency is what will sustain you over the years. Okay? You want to be trading 10, 20, 30 years down the road. You don't want to be trading fantastically for a year or two and then be wiped out. And trust me, I know plenty of traders who have gone through that. So it doesn't matter if they've made hundreds of thousands or even millions of dollars, because most of these traders have lost it all. So what we want to do is have a level of consistency. That's what really will make you a successful trader. Okay? So the way to get that is by keeping your trading simple and with trading with the trend. All right? Sure, you can make a lot of money picking tops and bottoms, but ultimately you'll have disastrous trades which will take away from your consistency. Okay, let's see here. Glenn asked, does this concept work with trading stock options in intraday time frames? Well, it works with intraday time frames, but I don't believe it works well with stock options because of the time decay and because of the premiums involved. So I've never really used this. I'm not an option trader per se, so I can't really answer that question. You can experiment with it. Once again, paper trade with it, see if it would. But most of our traders just actually trade the actual unit. They don't trade derivatives of that. They don't trade options on it or things of that nature. So I'm sorry, Glenn. Can you use the DONCHIAN channel to set the target price too? I'm not sure when you say set the target price. Well, when you say the exit price, well, yes, that's what was our exit. That was our main exit, our standard exit. When it gets to the top DONCHIAN channel, that is your target exit. Okay. Does it have an option for candlestick chart? That really is up to your charting software, but yes, you can apply this with candlesticks. It really doesn't matter. I know a lot of our traders, a lot of our students use candlesticks. And remember, all we're looking for, it doesn't matter what kind of chart it is. Remember, I was looking at tick charts today. It doesn't matter. All that matters is that you see one of the bars intersect that median line. Okay, once it does, it doesn't matter if that's a candlestick. It doesn't matter if it's a range bar. It doesn't matter if it's an open, high, low, close bar. All that matters is that it's touched that median line, because that's giving you a reference that we've pulled back to a sufficient point, but now we want to start adding our entry point. Okay. Where can I find stocks to trade? Do I have to purchase a filter software? Well, once again, if you have this, and as we stated with METASTOCK, you can use their scan, and plus it gives you that scan, and it'll show you a scan of all the setups, and you'll see that with the add-on of where there are setups. You can just run a nightly scan of the S&P 500, or maybe just your certain stock that you're interested in, and you'll see if any signals have been generated. What else does it say here? George asked, does it work for Forex pairs? Yes, it does. Oh, you entered the room late. Yes, it does. It works for Forex pairs. I'm sorry, Rico, if you want me to be away from the microphone. Okay, sorry about that. Once again, I didn't see anything here, but sorry if it was coming through too loud. Okay, this is a great question. Jim is asking, do you recommend using a daily and weekly DONCHIAN chart in conjunction to validate your action? And this is what a lot of traders do, is what they'll do is they'll see that we're in an uptrend on the weekly time frame, and so they only want to look for an uptrend on the smaller to validate, okay, so that the uptrend, the higher time frame validates the lower and vice versa. And that's fine. I have nothing against this, but personally I don't use that technique. Why? Because I really found no consistency. I know a lot of people swear by that. I know it's conventional wisdom that that's the way you should trade, but all it's done for me is keep me out of a lot of good trades. Many times in the past, I sat and waited for the lower time frame to confirm, and I missed some great setups because it wasn't in sync with the higher time frame. So I personally just trade the time frame I'm looking at, okay? If I'm looking at a 5-minute bar, that's all I'm trading. If I'm looking at a weekly bar, that's all I'm looking at. Now, needless to say, we have students that swear that they only trade by looking at the higher time frame to confirm the lower, and they have great success, so that's fine. So it's nothing that stands in the rules of the strategy. It's just that personally I don't use that, okay? So if you want to, sure, by all means, go ahead. You're asking if this is available for TC2000. I'm not sure if it is. I don't know. We don't have the add-on for it. I know that, but I'm not sure if their DONCHIAN channels are available. That would have to be something you ask them. Let me see the next question. Corey asked, Steve, as a market maker, did you ever go home with a full book if you were not flat, and how did you price asks and bids? This is kind of getting away from what I want, but yes, I did go home with a full book a lot of times, and sometimes it worked, and sometimes it didn't. As a specialist, you had to price the bids off of the New York exchange. They were basically, they were the market that set the bid and the ask, and we could either match that or better that. So what we did a lot of times was better that. If New York was making the market, a quarter, 3/4, what we tried to do was either match that or make it, 3/8 to a half possibly, or 3/8, 5/8, to be inside their range in order to get business. But that really goes against what I trade now, because that was all fine and well then, but that's not the way we trade now. Now, once you leave the floor, it's a whole different way of trading. You have to really learn how to rely on yourself rather than to rely on order flow and a book. So, so what you have to do now is really learn how to become a student of the market, and that's what I do. I teach students how to trade with a specialist edge. Oh, you're more than welcome. Is there a guidance to exit if the trend breaks form, perhaps the ATR? Yes. Once again, this is all different advanced techniques we have in the course. We do use the ATR for a preliminary exit that you can use, but once again, this is all things that purchasing the course you would learn about. I gave you the standard generic rules, which are fine. You could use those, and they cover just about 75% of the trading method. But if you want to up your chances for success in different types of environments, you could use the advanced techniques, and that's what I teach in the course. Oh, this is a great question. Mark says, what is the percentage of success versus stopped out of strategy number 1? Well, the reason I would just say offhand, okay? Now, it depends on how you're going to trade it. That's why we call this a strategy. See, you can't come up with win-loss ratios or percentages of wins to losses. You can only do that with the system, because the system trades the same way each and every time. But with strategies, we give you a basic set of rules which covers about 75% of the method. The other 25%, sometimes 30%, we use for discretion. This is where the advanced trading comes in. This is what I teach you pretty much like a mentor class in the course. So if you want to use, as I was explaining in the last question, an ATR technique to exit early, you can do that. So that way, had you used the standard technique, let's say you got stopped out. Well, if you used the advanced technique, you would have exited with a nice quick gain. So there's no way to really come up with numbers with strategies, because there's a lot of discretion. And that's what we do. Remember, as I stated, we're an educational company. We're not a systematic company. Even though we provide you with strategies, and with entry points and generated signals, we want you to become a part of the process. We want you to trade on your own. This is the way I was taught. My mentors taught me not to mimic and trade exactly the way they trade. They want me to stay with a standard process, but then use 25 or 30% of my own discretion when I come to a particular environment so that I can make the strategy my own. Okay, so we don't have any statistics. All I can tell you is we stand by our word. Our reputation is really what we stand by. And if you want to do more information on us, do a Google search on specials trading or myself, Steve Primo, and you'll see that we have a lot of really satisfied customers. A lot of people are asking, is the DONCHIAN channel ever called anything else? No, it's usually called the DONCHIAN channels. Now, I know there are other tools that are very similar, such as the Keltner channels or envelopes, moving average envelopes, but I really like to use the DONCHIAN channels because they have that kind of stair-step up-down approach. So that's what I really like to use. So some people have told me you can apply this with Keltner channels. I don't use them, so I can't give any advice on that or just show you how well it works, okay? Let's see. Someone else is also asking about using the higher time frames, increases your probabilities. Once again, we have students that swear by it. I just personally haven't seen it increase my probabilities. I like to trade just the chart I'm looking at, okay? Is the one-tick rule in relation to the close open or the high-low? That's a great question, Sean. It's to the high-low. So in other words, we want to see that price trades one tick above the previous bar's high if we're going long, and one tick below the previous bar's low if we're going short. Now, a lot of our customers say, well, Steve, one tick isn't enough. Sometimes I give it anywhere from 2 to 5 ticks. That's fine. This is where the discretion comes in, because many times you'll see it trade 1 or 2 ticks above and then go straight down, and you'll get stopped out. Other times it'll go 1 or 2 ticks and then just keep going. Okay, so it's up to you. This is where the experience and the paper trading comes in. But yes, that's a very good question. It's always above the higher of the range or the low of the range. This is why it doesn't matter what type of chart or what type of bar you use, because the high on a candlestick, the high and low on a candlestick are going to be the same as the high and the low on an open high-low close bar. So all we're looking is for the extreme high and the extreme low of a particular bar. Okay. Tom is asking, it looks a lot like Bollinger Bands. Will it work for Bollinger Bands? We've tried this for Bollinger Bands. We have a totally different technique for Bollinger Bands. That's strategy number 3. And that's a great short-term, very quick, kind of a really quick trending move. But it's similar where we use the Bollinger Bands to discern trend, but it's not exactly the same. We're not concerned with the median line. Okay. The DONCHIAN channels really come into play very much with the setting and with the way they're displayed. Okay, let me see here. Once again, that people are asking, are they similar to Bollinger Bands? No, in my experience, they're really not. Is there a download link for the DONCHIAN channel? That's something you probably have to ask your charting software. I know that some of our members use TradeStation, and they said it wasn't available, but they contacted the tech support, and they sent them the code. All they had to do was upload the code, and they had the DONCHIAN channel. So I'm sure other charting softwares will offer you the same. Okay. Someone's asking, is there a particular setting? Yes, we use the 21-period DONCHIAN channels. Okay. A lot of people are asking, once again, for risk-reward ratio, but if you heard, as I stated earlier, you can only get risk-reward ratio or statistics off of a system. Why? Because a system does the same thing each and every time. Doesn't matter if you're in a choppy market, if you're in a rangy market, or if you're in a straight up or straight down market. If the system generates a buy or sell, you have to do the same thing every time. That way you can go back and back test it. These are not systems. These are strategies. We have students who take the same signal. One person can make a couple of points. Another student taking the exact same signal will make 10 points. And then another will break even on the trade. Why? Because they all use different techniques for entry, different for stop placement, and different for exit. So there are a million, literally a million and one ways to trade these. We give you the basics, such as what I shared with you today. This is the benchmark. But then in the course, we go into detail how you can enhance that to make it fit your own, okay? So I hope that answers your question, because I know a lot of people are asking about win-loss. Okay, let me just go here. We just have about 5 more minutes or so. Yes, I think they are listed with freestockcharts.com. That's if you want to get the DONCHIAN channels. Just see here. I just don't want to miss anyone before we come to the conclusion here. Someone was asking thoughts on range bars using in conjunction with the DONCHIAN channel. Yes, the only thing I would say with the range bar is you have to do your own type of research in finding a range that fits for you. I know some people like to use roughly 1 or 2 points in the E-mini. Other people use different ranges for stocks or for Forex. And it's really a subjective thing. It's more discretionary. So I can't sit and tell you that this is the one range you use for stocks, this is the range you use for E-mini. It's different for each person. We have some people that use, just a couple of tick ranges and other people that use 1 or 2 points. So it really is a personal choice, okay? Let's see if there's any more questions before we conclude here. Once again, I use these personally. For the Renko charts, that's a great question. Ask if it works for Renko. I've never really applied these to Renko charts, but feel free, once again, should you become a member and just want to experiment with it, I'm sure you could probably do that. I really, as I stated, I don't want to keep my trading that complicated and just trade each and every type of bar chart and each and every try and trade each of them, because then I start to make my trading complicated again. So I virtually am only trading 1 or 2 markets at a time using the same thing that I've been used to. But remember, I never tell my students to do what I do. I want them to find their own way. So I pretty much mentor and make sure that everyone understands the process, and then we fine-tune it to fit your needs. And this is one of the reasons why we really don't have a trading room or a chat room. It's because we feel that many times students will turn this into a crutch, and they'll start to just trade the way I trade, and then they'll try to mimic that and invariably lose money. I've mentored students where I've taught them exactly the way I trade, and then I find out how they're doing, and they've lost money when I made money the same week. And we couldn't understand it until finally we discovered that no two people can trade the same. You have different aversions to risks. You have different feelings about what the market's going to do. So what we try to do is just give you the benchmark, just the standard foundation for things that have stood the test of time, and then we fine-tune it and mentor it with these advanced techniques to fit your persona. Once again, we stand by our word. If you don't feel confident that that's enough information, do a Google search on us, or call us up or email us and ask us any questions you'd like in detail, and we can really go on further and show you some current examples of that. Okay, I think we're coming towards the end of the show here. I want to thank you so much. I really appreciate it, and I want to thank all the good people, Stephen and Becky at Candlestick Forum here for inviting me to speak, and I really appreciate it. It's the first time I've spoken, and I want to thank you all for taking time out to listen to me. Once again, if you're having trouble, if you're struggling with your trading and you don't seem to be making ends meet, trust me, I know what it's like. When I was on the floor, I really thought I was going to get let go after a year or so because I wasn't making ends meet at all. For all the hard work I was putting in, I couldn't make any money. It wasn't until I simplified my trading and start really keeping it simple and just trying to listen to the market instead of outside sources that my trading started to become consistent. So I've accumulated a lot of things in my 37 years, and this is what I teach and share with all of my students. So hopefully I can shorten your learning curve so you won't have to take that long to become consistent. I look forward to all of you becoming members of Specialist Trading, and thanks once again to everyone for attending tonight, and I hope you take advantage of that special offer we have for strategy number 1. Thank you so much, Stephen, and to Becky. I appreciate it, all the people at Candlestick Forum.